Well, hi everyone, and welcome to our fifth session in the series of 6 around what it really means to work on your business rather than in it. We're actually really enjoying presenting these sessions to you, and the ability for us to be able to pass on some of the knowledge that we've gained over the many years in our business, working with clients, and the feedback we're getting has really made it all worthwhile too. So thank you especially to those who have taken the time to give us feedback, provide us your thoughts, and to the people who provide us some 10 hat structures, thank you so much. They were great. Hats are on the way. Really hope you're gaining greater insight also into what it means to be working on your business and the framework we've created around that with the solid foundations process. We'll touch on the solid foundations again today, and we're hoping that really helps. As we said right back in session 1, if you go right back to that time there, working on your business is a phrase that everyone wants to throw around. We see it everywhere, but very, very few people will provide us with a mechanism to tell us what this really, really means. And we really hope we're doing that for you. But more importantly than that, we're really hoping that it's not just theory, and we're looking forward to the actions and the real difference you've made to your business, but also the people in and around your business, because business is a people thing. So the changes you've made to yourselves, fantastic. The changes you've seen in the people around you in business, but also around you in general, would be great to know more about too. So today, as I say, it's the fifth session, and what we're going to head in today is we're going to head up to the pillars. We've talked about the foundations. Now we're working on the pillars, and we'll continue to take a deep dive into some numbers today. I'm really keen for you later on to see our live demonstration on how just a few changes in your business can really increase the profitability and the value to your business. But let's just hold that. That's for later on. Today, we're going to spend some time looking at the information in a well-constructed finance hat. So you'll see today the finance hat in action, but how the impact it can have on the wider business and enabling better decision-making right through your business. It's also a bit of a look into the spectre about what you can achieve while working with your accounting and finance team on the matters, which is just beyond tax. It's more than tax finance, and you'll see some things on that today. So let's have a look at what we'll be covering. As always, we'll do a quick recap on some of the major points from the previous sessions. The topics we'll cover, but first of all, we'll talk about the pillars of a strong foundation models. The first one, which is knowing your numbers. And in doing this, we'll look at the distinctions between KPIs, which are key performance indicators, and critical drivers. And you'll see a real difference there, which feeds back to the law of results. We'll also look at the snapshot of what we can cover when we run a seminar called the 7 Ways to Grow Your Business. That's where we'll see our live demonstration. And to finish off, you'll have enough information that you'll be able to create your own dashboard for your business that can highlight numbers that you should be aware of. So some great content coming up. Michael's worked a hell of a lot putting this together, and I'm looking forward to introducing him here to take us through knowing your numbers, both some thoughts, but also then to see some real actions in place that you can take on board. So enjoy, and away we go. Over to you, Michael.
Thanks, Tim. As always, we'll take the focus off our mugs, and so that people can focus on what's on the screen. Look, great to be here again this morning, and looking forward to this session. As accountants, we love our numbers, but yeah, we know that there's a lot more to than just standard numbers. There's a lot more to running a business than just numbers, but they are an important part of it. So just to recap, as a reminder, but also for the benefit of anyone who may be joining us for the first time, we'll look at what we consider to be the cornerstone of where your focus should be when you're working on your business. And that is what you see on screen there. That's the strong business model. Again, the foundations of having a clarity plan, a strategic plan, the 10 hat structure around it, and the cash flows and budgets, they're the foundations. They support the growth, and they help weather the storms. And of course, last week we covered off on the final component of that foundations being the importance of a 10 hat or organizational structure. That document, as we discovered, sets out the 10 hats or the departments that all businesses have. We've highlighted the function of those hats, and of course, those functions determine responsibilities. Sorry, Tim, we just jumped there. I was also looking at the pillars of know your numbers. We always say we want to make sure that those pillars, know your numbers and systems and the accountability that they put in place, that enables the growth. And today we're looking on knowing your numbers and what that means in the context of working on your business. And of course, we finish off there with the roof, the importance of having appropriate business structure and asset protection to ensure that what you've built up is in fact protected. So that's a snapshot. Now moving on to, we looked last week at that 10 hat structure, and you can see there the functions of each of those hats highlighted. We looked at the benefits of having a strong 10 hat structure, and we delved into what the critical principles and fundamentals were to consider when you're developing your own. We spent a fair bit of time discussing the function of each of those, and that to me was a really important session. I'd really like to know now, how did you all go with creating one? Like, everyone online seemed to think that having one was a great idea, so it appears, decision made, fantastic. But what about the actions? What about getting your 10 hat structure started? Going back to a previous learning, did you dump the idea? Did you delegate the doing of that idea? Did you do it right then? Or did you at least decide when you were going to do it? Really important. We gave you a little snapshot of what our personal 10 hat structure looks like and the detail that we go into relation to the roles and responsibilities of everyone working in our organisation. So hopefully that helped. And as Tim said, well done to the people who sent in their first version of the 10 hats, and your very own set of 10 hats are being put together right now for delivery. So look out for those soon. Look, before we get into our main topic today, I just want to recap on a couple of wise words. And again, Zena's online loves these sayings. So these wise words that we've shown you before, they were uttered many years ago. The first one being, if you want something you've never had, you must be willing to do something you've never done. You've seen it before. That's Thomas Jefferson uttered those a long time ago. But today we'd like to add another saying, and that is, if you do what you've always done, you'll get what you've always gotten. Now, Anthony Robbins penned that. So just read that again. If you do what you've always done, you'll get what you've always gotten. Who thinks that's true? I'd really like you to now start working and pop your answer in the chat box. Do you think that that is a true statement anymore? Whilst you're doing that, I might rephrase it a little differently. Do you think you'll get what you've always got, or do you think you may get less? Other business owners are lifting their game. They're improving their marketing. They're getting better at selling. They're building effective online presence. Technology in the cloud, driving local and worldwide competition, and it's starting to put downward pressure on prices and margins. So if you do what you've always done, you'll get what you've always got. I'm not so sure about that anymore. How did that work for Kodak? Unfortunately, not too well. Do you think the competitors to Uber and Facebook and Alibaba and Amazon are doing what they've always done? Or are they having to re-engineer their business in some shape or form to keep up with these and the many other companies that are around? I just saw one example there, an answer, yes, you may get less if you don't adapt. And that is so critical. Go back to, I think it was session 1, where I said, Charles Darwin has said it's not the strongest of the species that will survive, nor the most intelligent. It'd be the one that is most adaptable to change. So true. So now more than ever, and with those phrases in mind, business owners have to be very aware of their numbers. Now, and when I say numbers, I'm referring to two very different and distinct sets of numbers. We'll come back to that in a minute. Now, you may recall our discussions around the critical importance of having a strategic business plan. One of those critical foundation stones. That plan includes things as your 1, your 3, your 5-year goals, your starting point, your ending point, what you stand for as a business. And we spoke about your business journey being a bit like a road trip. And let's just say, for example, that our strategic plan that we've created for our business shows that our road trip is going from, say, Melbourne to Queensland, straight up the Hume Highway. Actually, assuming we can get past the 2 border patrols that are standing in our way at the moment. And I was actually thinking about that. That's a great analogy for at this present time. Along the way of our journey, we're going to get blown off course. We're going to run into roadblocks at any time, out of the blue, with little or no warning. We may be sailing along the Hume, 110 kilometres an hour. All of a sudden, huge accident on the Hume, say Wangaratta or somewhere around there. And that accident could be, of course, COVID-19, lockdown 1. And that sees us being diverted hundreds of kilometres into the back blocks of northeastern Victoria. Now, if you don't have a map of where you're trying to get to, a la a strategic business plan, then you may end up driving around in circles for longer than we should have been. Lost in this reactionary phase that we talk about of lockdown 1. For longer than we should have been, unable to get into that recovery phase, or at least into a phase where we can grow our businesses again. So eventually, though, we might find ourselves back onto the Hume Highway somehow. But now we're stopped on the New South Wales border due to lockdown 2. But I want you to think about this. Maybe, just maybe, if we have had a strategic plan to follow a lot earlier, we may have got across that New South Wales border before lockdown 2 occurred. Maybe. But yes, we still may get stopped at the Queensland border. But in terms of our business journey, we've been able to progress to move our business along the length of New South Wales. We've survived. Our business has hopefully got stronger along that journey. I hope that makes sense, and that visual there you can see. But this analogy, of course, applies to recent events around COVID-19, but it can be applied to your business at any stage. And it applies no matter what stage of the business life cycle you're at. When I talk about a business life cycle, we're at startup. We might then move into what we call a survival mode. We then may go into an expansion mode or phase. And then we might go into a consolidation phase. And then we move the business into a being ready for sale phase. So this applies no matter what phase. You may have also picked up on the fact that we believe, possibly, that a strategic business plan, 1 to 2 page working document, is a critical part of working on your business. So I hope you have picked up on that fact. Trying to be subtle as a sledgehammer with that. So before I move out of this need to, for you to see that a strategic business plan or an end goal is important, I want to ask a question. Has anyone ever attempted a 1,000 or a 5,000 piece jigsaw puzzle? Okay, we may have had to try a few recently in lockdown, but have you ever attempted to complete that puzzle without the box cover or that end result in front of you? Well, I can tell you it's infinitely so much harder to do that. And in terms of your business presence, it's going to be harder as well. But doing that, attempting that jigsaw puzzle without that box adds an enormous amount of time to the project. And trying to run the business without an end goal in mind or measurable targets, it's the same thing as attempting that jigsaw puzzle without having that finished product in front of you. It may add years to you achieving your goals, may. So hopefully that you can get that. And here is a little tip for anyone running a business that I'll pass on. I mentioned before about business life cycle, where we have startup phase, we go through to survival, to growth, to consolidation, and then to your business ready for sale phase. No matter what stage of the business life cycle you are at, please always operate it as if you're getting your business ready for sale, even if you're not. Why is that? Well, if you've ever sold a house before, chances are that your house looked the best it's ever looked and everything worked, everything was spot on just prior to sale. Think about that. have your business looking sale ready every day. It's going to make a massive improvement to your bottom line and achieving your goals. Okay, so whilst we've been driving around on our business journey, getting diverted as we do in everyday business life, and we've been stopped at the many roadblocks that we in business encounter along our business journey, we should have been checking the critical information that appears on our car dashboard, and hopefully not just wandering around aimlessly. We should be checking that dashboard, shouldn't we? And of course, those gauges are things like our fuel, our speed, the temperature of the engine, oil pressure, and if we're lucky enough to have sat nav, maybe we can use that to see if we're still heading in the right direction. Our business is no different. We should be checking to see if we're on track. We should be checking the critical gauges or the numbers of our businesses. Numbers is, of businesses, there's people who run multiple, on a regular basis. We want to make sure that our business assets, and that's our team, our plant and equipment, and most importantly, you, making sure you've got enough fuel to endure being blown off course, endure sitting for weeks or months in lockdown roadblocks that we're encountering. So I have a question for you, please, and please use the chat box, or if you listen to this later on, just write it down. What are those critical gauges or numbers that you should be looking at constantly in your business? You should be checking anywhere from 3 to maybe 6 or 7 regularly. But please, whatever you think comes into your head, type them in the chat box or write them down. And whilst you're doing that, I hope that after today's session that you may have a different answer, or at least have additional answers to what you're typing in there. Tim, you want to read out any of the ones that are coming through, please? Any coming through?
Yeah, we'll have a look here. So we've got what type of question are we looking at here? We're talking about, so answers are coming through at the moment, just waiting to see a few more come. One of the questions in the meantime, Michael, is from Frank, which has said, should we be checking our numbers on a daily, weekly, or monthly basis?
Great question, Frank. And the answer will be, depends on how critically important those numbers are. If, for example, you're checking cash at bank, I'd want to know that pretty regularly. If, for example, and there's a couple of other things that we're going to be looking at later on, like maybe debtors and creditors turnover times, that could be done weekly or even monthly. So it will depend on the number you are questioning. In my world, I check the bank pretty well every second day. I have someone do that, but most of them are done on a weekly basis. Yeah. So good question.
Excellent. So also we've got a couple of other thoughts coming through. We've got return on assets. Obviously, someone's been paying attention to the 2-minute MBA. We've got debtors, and there's a good one there about checking out debtors. What else have we got here? We've got the bank balance that comes through a number of times. Ratios of employee ratios have come through as well. So some really good measurements that are there. Yep.
Nicole's just also said, yes, staff wellbeing, and I'm going to touch on that it doesn't have to be financial. So that's a good point, Nicole. All right. So thanks. And hopefully for the people who have either written it down or sent them through, I'm hoping that this will, after this session, you'll actually have a few more to look at. Okay, now create your own dashboard. Most of the software out in the market at the moment allows you to do just that. We've helped a number of clients create dashboards specific to their business, and we tend to use Xero, but as I said, most of the software out there can do it, and you can create these dashboards by going to the software providers and see what they've got, or speak to your accountant or bookkeeper to assist in setting up those dashboards that take the information straight out of your online accounting software. Saves you having to go and do multiple spreadsheets. Now, before we launch into knowing your numbers, it's important that we have a very honest and accurate understanding of where you are in relation to knowing your numbers. Now, Do you know what your profit and loss statement actually tells you, or what your balance sheet is really a snapshot of? Yet, do you ever wonder why your profit figure is so different to your cash position? Or do you wonder, where has my cash gone? Do you monitor your income and expenses throughout the year? And when was the last time you reviewed your expenses line by line? And do you understand the difference between receiving a salary or a wage, or taking dividends, or taking drawings? What do you currently receive if you're getting paid out of your business? Or when your accountant starts talking to you about these issues, do your eyes glaze over? And it sometimes appears that maybe your accountant is talking, well, maybe accountantese in language that they only understand. Look, it's okay to recognize that. I want you to remember back to that 4 stages of learning we spoke about. We're all at different stages, and maybe you're at conscious incompetence. You know you don't know everything about it, and your accountant may be up there at unconscious competence. That's okay. And hopefully this session will take you further along that curve. I'd really like you to start joining the dots in relation to this learning and the 10 hats of business. Now, remember, one of the guiding principles of a solid 10-hat structure was that responsibility does not mean doing. So, well, you as a business owner may be responsible for the finance hat, and Tim said we're working on with the finance hat today, but someone else may be doing the do. Is someone else either within your business could be doing it, or it could be an external consultant, such as your accountant or bookkeeper. Responsibility does not mean doing. Now, earlier I mentioned that when it comes to a strong business pillar, that pillar of knowing your numbers, it is our belief that we're referring to 2 different and 2 distinct set of numbers. They are KPIs, or key performance indicators, and critical drivers. In our opinion, key performance indicators, or KPIs, refer to the numbers that are results, like your sales, your turnover, your gross profit, your net profit, your debtors, your creditors, your cash at bank. And critical drivers are the activities or actions that drive those results. For example, how many qualified leads are we generating this week? How many of those leads are converted to sales? How many sales calls are you making? How many outstanding or overdue account phone calls have been made this week? Or how many completed jobs were done this week? Now, some of you may have picked up on a couple of words there that I used: results and actions. And we can relate this back, of course, as Tim said earlier, to the law of results. KPIs, key performance indicators, tend to be the results. Critical drivers tend to be the actions we take. And we've said it several times, decisions without actions will not get you any results. If we focus too heavily on the results rather than the actions, then it may have a detrimental impact on the results that we want to achieve in business. Now, I want to make it clear, we're not saying you shouldn't focus on the KPIs at all. We definitely should. But what we have to recognize is that the critical drivers of our business, they're the ones that will have the impact on the KPIs or the results. But let's have a look at some key performance indicators. And whilst we're doing that, I want you to take you back to the concept of the 2-minute MBA that Tim took us through in the early part of the series, might have been even the first session. If you remember that, the business life cycle showed us that as business owners, we invest in assets such as equipment, stock, our team, and from those assets, we'd like to generate income and expenses. Hopefully, it gives us a profit. We would then like to turn that profit into cash so that we can either reinvest in more assets, pay down our debt, or, heaven forbid, even pay ourselves. Now, we also learned from our 10-hat structure that function, and therefore the responsibility of the leader, is to increase business efficiency. In other words, that just means getting that cycle spinning faster. So with those concepts in mind, let's have a look at now some KPIs, or numbers that you should know, that can be found in the profit and loss statement that we see there and from the balance sheet. Now, we're not going to look at the cash flow statement, as Tim spent the best part of session 3 on that topic and covered that off quite well. So it's just about the profit and loss statement and the balance sheet. So KPIs from the profit and loss statement. Obviously, there's the obvious one there, which is not listed on the slide, is sales, because that's without sales, what's the point of being in business? Gross profit. This is basically your sales less your cost of sales. It shows you how much money you have left over to cover the overheads of your business and pay yourselves as owners of the business. In this example, sales 250, the cost of sales is 105. Quite simply, 145,000 is gross profit. Now, your cost of goods sold or cost of sales includes such things as your stock purchases and possibly contractors or direct labor costs associated with those goods and services that you produce. So we can move on then to the gross profit margin. Now, this is basically just looking at gross profit in a different way, as a percentage. So we take our gross profit that we had last time from 145,000, divide that by our sales, and that gives us a gross margin of 58%. What that tells us is that for every $1,000 that the business generates, $580 is left to pay for overheads and to pay the owner. Okay, next one, net profit. Simply, that's your gross profit less all your overheads expenditure. So in our example, 145 less 65 gives you $80,000. It shows you how much money the business has made, obviously after all expenses, including depreciation and taxation and things like that. Now, these are some of the basic KPIs around a profit and loss statement. And I'm going to leave you with a little saying around these KPIs, and especially when it comes to sales and gross profit and net profit. Sales or turnover, honestly, that stokes your vanity. Net profit, it satisfies your sanity, but ultimately, cash is king. We've said it before, and Tim said it in the 2-Minute MBA. You cannot go and pay for your stock, your wages, or your loans with profit or turnover. It's only cash. We have seen many profitable businesses going broke. Really important to remember that. Now have a look at some KPIs from your balance sheet. And we have referred to that again as your statement of financial position. Now, the balance sheet is, look, it's a snapshot of your assets and liabilities. It's what you own and what you owe at any one point in time. And remember, back to when we're looking at 2-Minute MBA, one of the main aims is to get that decent return on assets, and someone actually put in there, great, one of the KPIs to look at is your return on assets. And you may remember when Tim presented the cash flow session that we'd have a look at how we could compress that cash flow cycle from the time that you ordered stock to the time you got sold it and get paid. So we're going to have a look at some debtors and creditors and stock turnover days. These are things that you can measure and put on your dashboard. Now, and hopefully you can actually see that a lot of what we've been covering and teaching you over the past few weeks is interrelated. And when you can start to join a few dots and appreciate the synergy of all these moving parts, then you're well on the way to being able to achieve what you want out of your business. So let's look at debtor days. And debtor days is really just your average debtors divided by your turnover or your sales multiplied by 365. In this example, debtors 72,500, sales 250, divide one into the other, multiplied by 365, and it gives you debtor days of 106. What that means is that on average, it takes you 106 days from raising the invoice to getting paid. Important that you measure that on a regular basis. Next one, creditor days. Same scenario. It's basically your average creditors or people that you pay and your cost of sales multiplied by 365. So in this example, the creditor days work out to be 182 days. So on average, it just takes you 182 days to pay your suppliers. Now they're pretty good terms. So that's fine, at least if you're measuring it. Because if you find your creditor days blowing out, what you may be experiencing is that you're using creditors' money to fund the business. On the flip side, if your debtor days are blowing out, well, guess what? Someone else is using your money to fund their business. Really important that you make that distinction. Another one straight out of the balance sheet is our stock turnover. And the formula for this is taking your stock on hand, dividing it by your cost of sales multiplied by 365. Again, I won't go through the example, but in this example, it's 73 days. So what we're saying there is that on average, it takes you 73 days to turn your stock over, to replace your stock. Again, just a measurement that you should be looking at, because when you start to look at these numbers, automatically you're going to start saying, okay, how can I improve this? So that's straight from the profit and loss and the balance sheet. So now we want to look at some numbers around critical drivers. We just looked at KPIs, key performance indicators. We'll look at some critical drivers. In a moment, I'm going to run through, hopefully it works, a live demonstration using a piece of software that we use called the growth equation. And this next couple of minutes is really an extract out of a workshop that we have run past called the 7 Ways to Grow Your Business. And before we get into that though, on the screen there you can see 7 ways in which any business can grow their business. Now, not every business will have one of these levers or critical drivers to manipulate, but all businesses will have some. Now, those drivers are increased customer retention. It is so much easier to make a sale to someone who knows you, likes you, and trusts you now than it is to make a sale to a new customer. Stats say it's up to 6 times easier. Generate more leads, and I qualify that by saying generate more leads of the type you want. Increase the conversion rate. No point in having all these leads come into your business. It's like, all these leads coming into a bathtub. If you've got the plug out, they're just going to fall through. You've got to convert those leads as they come into the business. Increase the transaction frequency. Get them to come back more often throughout the year. Again, not everyone can do that, but certainly a lot of businesses can. Increase the transaction value, get them to spend more each time they come in. Who's the master of that? Macca's. Would you like fries with that scenario? Look at reducing variable costs, and they're the go to your suppliers and see if you can get better deals on buying the goods that you have to buy. And of course, reducing your overheads. Look at line by line areas that maybe don't add anything to the value of your business or running your business. So I'm going to show you what happens in a business in a moment when you have a plan, you get some goals, and you've got some KPIs or key performance indicators, those 4 to 5 key drivers that will help you improve your profit and your cash flow. And then you put those into place. Now, this is a case study. It's based on an electrical contracting company. Hopefully you can see it. Now, it took them a little over about a year, I think, to get improvement in their business profitability. So, of course, it started with a planning session, and they had a 1-page business plan that they took from that. And out of that plan, they identified 3 critical drivers that they had to improve. And they wanted to work on the conversion rate of prospects to customers. They wanted to look at the average transaction value of what they were selling. And they really did need to look at the cost of goods sold or the variable costs as a percentage of the sales. But they also knew that they had to probably spend some money to get some improvements. And so they realized that their overheads may go up a little bit. So anyway, the first driver they worked on was the conversion rate. Now, what they found was the owner was doing most of the quoting, and the conversion rate wasn't that good. It was around 50%. I think Tim's got that highlighted there. Yep. Now, systems was put in place, and they had some follow-up protocols. And they split the quoting in two. The owner took care of the residential quotes, and a senior sparky or electrician was allocated to the maintenance quotes. So reporting was put in place as well, and they watched that conversion rate increase over a period of time, all the way up to 75%. So customers hadn't been coming across that line because they weren't being systematically followed up. Now, you can see that the number of customers now has jumped up. The next driver they worked on was their average transaction value. And over time, they were able to lift that by around 5% to $1,638 is the number they measured it. A better pricing system identified there was a few jobs in the service industry side of things that they were seriously underpriced on. So you can see then how that impact, what that impact then has just done on sales. The third driver they worked on was the cost of sales. And they focused on, they had a lot of cost of rework in the housing jobs they were doing. There was a lot of mistakes and wasted labour time. And they worked on some quality control and with signing off and things like that. But the systems they put in were detailed. And this really also involved a bit of change management, a bit of mindset change, and teams had to be trained. But they didn't mind doing that. But in doing so, they were able to reduce the cost of goods sold down by 5% to 65%. One of the things distinction I want to make here too is that not all your KPIs or critical drivers have to be financial. An example that we've seen before was a window manufacturer used a lot of aluminium in the product in the production line, and was experiencing low margins, which they identified a lot down to waste. So long story short, they put in systems, processes, and trained their team up, and they put a highly visible KPI up on the wall of the factory. And that KPI was simply this: the number of times those big rubbish bins were collected by the trucks each week. They put in a bit of accountability in their reward system. Guess what? That wastage actually dropped down. But that was just KPI around the number of times the bins were emptied. It wasn't anything fancy. So I just wanted to reinforce it doesn't have to be financial. So back to our example here. So in this example too, the electrical company spent a bit of time and money on putting in a plan, and they actually implemented some accountability coaching. And their overheads actually went up by $35,000. So their overheads went up to $300,000. So you can see, I just want you to look at, there was nothing major they did. They just honed in on those three areas in this case. But the impact of the bottom line, Tim, if you can see if this works, here we go. The impact of the bottom line was that it went from 146 profit to up to 226,000 profit. All well and good. It just didn't impact the profit and cash in the bank in their business, but it actually had an impact on the value of the business. So I'd like you to focus in on three main points from this exercise. Please don't focus on the actual numbers that we went through. I just want you to recognize the powerful impact that the compounding has when you spend a little time on each of these critical drivers in your business. There is no silver bullet. Again, not every one of these drivers may relate back to you. For example, a real estate agent probably won't get customers coming back time after time after time. That's fine. Treat that as a bonus and say, well, I'll just concentrate on generating new customers by referrals. That's the first point. Second point, in your business now, do you know how many customers you have right now? Do you know how often they buy from you? And do you know what their average spend is? If you don't, you should. Because in that equation, you can see we had to start, just like your journey, we start with a beginning, a point A of what you've got now, and then we work on increasing that. So that's a great opportunity that you could be working on your business right now. How many customers do you have? How much do they spend with you each time? And how many times do they buy from you per year? Now, for the business who are just starting out, you've actually got a fantastic opportunity to do that now. Build on it. And the third point I'd really like you to take from this example was that it's just not important to know your KPI numbers, key performance index. You need to know and measure those numbers and your critical drivers. Now, there's a well-known saying, if you can't measure it, you can see it on the screen there. You can't manage it. If you can't manage it, you can't improve it. There's various adaptations of that, but I believe it's important because it leads into a saying that we use: what you can measure, you can manage. And if you can manage it, you can improve it. So I think that's pretty well it, apart from now summarizing some of the Know Your Numbers topic. So that maybe these can assist you in determining what numbers you should have on your dashboard. Yet the numbers that you continually refer to as the owner or leader of your business. These numbers they should be critical to you improving your business efficiencies, getting that business wheel spinning around so much quicker. So there's a snapshot there. KPIs, day-to-day stock turn, revenue per customer, number of new customers, number of completed projects. What drives those numbers? Of course, you can see them listed there on the right-hand side. Number of phone calls to prospects, number of meetings with alliance partners, number of team training sessions, number of systems that were trained to the team. These are all additional to what we've spoken about. Number of sales meetings held. You could go on. There's a lot of numbers that will be specific to your business, and that's great. Tailor your own dashboard. So Tim, I think that's enough from me. I might hand that back to you to tidy up week 5.
Thanks, Michael. And can I just say how insightful that is to see so many numbers in action. It's not natural for a lot of business owners to want to look at numbers. And 2 really critical points there, I would say, is the numbers are dollars and also non-dollars. And you can see on the screen there, they're creating that dashboard. So many of those critical drivers and KPIs are not dollars, they're numbers and actions. So anyone can do this. It's just a matter of having the right systems in place. And a really powerful insight into how pulling that finance hat on, really pulling it on and working with the leadership hat can make such a difference to the whole business through every other aspect of it. So, of course, thanks, Michael, again. Let's wrap this up. Like every session, we love your feedback and we want some feedback. So we're going to ask you to please, if you could, go to sagegroup.com.au/HumeCC week 5. And we're going to plunge a little bit into the world of personal accountability this time in our feedback, because we all know why people exercise in groups. It's the mix of social interaction and mutual accountability. And the difference is nothing at all to your business. You want to build a reliable team around you for the social interaction and the mutual accountability. That can make such a point of difference to you and your business right now. So as you're acutely aware in business right now, it's competitive, it's challenging, and you need people around you. We'd love your feedback. We'd love to know what the 3 top critical drivers or actions are to measuring your business. We want to know what the top 3 indicators are to measuring in your business as well, in terms of KPIs, which are the results. And we want to know who have you appointed to be your team around you? Who is going to hold you to account on your actions? Love your feedback. And we do it, as I said before, we appreciate those who provide that feedback to us throughout the year and after each session. So we're looking forward to next week. Next week's going to be our final webinar in this series. We're going to take a deeper dive into some of the strong foundations for a sustainable business. We'll be talking about systems. Look forward to that. Systems we touched on today can be really critical to growing your numbers. So thank you once again to Michael. Appreciate all the time you put in. Appreciate the time to everyone else who's on the line too. This isn't easy right at the moment, and times are challenging. And the commitment you're making by spending 45 minutes with us for 6 sessions is fantastic, and we do truly appreciate the support of that. So thank you once again, and have a great day. And better than that, have a great week. Thank you.
See you later.